So kicking off tonight, we've got Ben Rogoff, Fund Manager, Polar Capital Technology Trust.
Debbie, thanks so much. Good evening, team. Okay, this works well. Very quick little stop through PCT, Polar Capital Tech Trust, where I've been the manager since 2006. Let's tell you a little bit about PCT. So this is the team at Polar. For those who don't know Polar, we're, I suppose, a boutique, we're a bit bigger than that now, fund manager, built by a technology team actually from the 90s that built a business around a franchise that I now find myself managing. That's PCT, that we recently went into 300. But around, we also manage two other products, and between them you can see it's a sizable business, which is lovely. It means we can invest in the opportunity set. We have one of the largest teams in Europe looking exclusively at tech. Although I should say, about 7.5 years ago, we launched an AI fund in anticipation of what I'm going to talk to you about today, which of course is central to our portfolio, but our excitement around AI. And we launched that, by the way, because we felt back then that at some point AI would happen. And that when it did, we wanted a vehicle that we could invest not just within the technology sector, but also beyond it. And so you'll find companies in that portfolio like Walmart or Publicis, or companies that we wouldn't naturally hold in a technology portfolio, but companies that we think are big beneficiaries of technology and of AI. The way we invest, this is an instant swap, so it has to be very brief. We leave very early stage investing to our people, usually venture capitalists, who focus really exclusively on that part of the life cycle. And it's great because if you can do that well, you can find a Google or a Wiz or something that gets bought for a big premium. But the hit rate will tend to be lower, bigger return profile will be higher. We don't really enjoy that part of the market. We equally try to avoid companies at the late stage of their life cycle or themes at the end of their life cycle because they typically look cheap, but almost always odd. Like empires, technology companies and technology themes are either in the rising or they're falling. And terminal growth rates, as we call them in the industry, are almost always negative at the end of a life cycle. So we focus on this dark blue bit where things are happening, and they're happening fast. People struggle to model them, which gives us opportunity as investors. Where we are today is a very unusual moment, we think, and I'm going to talk about AI now, as you could imagine. We liken the AI story today to something called a discontinuous technology change or discontinuous technology progress. Difficult to bring something like this to life. So we focus on skyscrapers, which for the whole of human history, people lived in buildings of about 5 or 6 stories, unless you lived in Yemen, which probably you didn't. But everywhere else, you lived in 5 or 6 stories until steel and the elevator came along. And very, very, very quickly, the cities were transformed. And we lived in buildings that would have been once, would have been the concern of fairy tales. And people at the time in 1885 couldn't possibly have understood quite how significant this moment was. In fact, in Chicago, where the first skyscraper was built, it said that people would spend evenings watching them and move around in the wind, anticipating, I assumed that they were going to fall down. Nobody could prove at the time that they weren't going to fall down, but they didn't. And again, cities transformed, and we don't even think about skyscrapers as just part of the world that we live in today. What's happening in tech, in AI, is not dissimilar. We've been making progress actually over time, from winning at chess against humans and so on. But the AI industry didn't start yesterday. It started in the 1950s. But this real progress that we've seen has happened really since 2017 with a new AI architecture called the Transformer that Google came up with and then freed to the world. And that's the architecture upon which things like ChatGPT have been built. The Transformer model has changed the parameter count, the trajectory of AI improvement very significantly. And you can't really tell on this chart because this is a log scale chart. But GPT-4, we don't know for a fact, but the parameter count, the sophistication of the AI model itself is said to be a trillion parameters, which is unheard of, literally off the chart, based on history prior to it. There's lots more to come. I don't know how many of you, maybe I'll just take a quick pause. How many people are using AI in a chatbot or something regularly? Oh, well, that's a good effort. More than I've seen in some other AJ, but so congratulations. The pace of this is very, very fast and furious. It's quite hard to articulate that or to really demonstrate that. My colleague who right now is in San Jose listening to the CEO of NVIDIA, Jensen Huang. I heard him in January. colleagues of mine were listening to Sam Altman and others just a couple of weeks ago. The pace of model improvement is furious. It's very hard to put into numbers, but if you think about the pace of Moore's law, which was really the underpinning of the semiconductor industry for the last 50 years, we're moving at 5 times that pace. The scaling of AI models is very difficult to grasp. Humans don't really like nonlinear change, but unfortunately, that's what you're faced with AI. We're scaling in lots of different ways. It's hard to do that in this session, but lots of models that are coming from the likes of OpenAI, from Elon Musk, XAI, and Anthropic. Obviously, Meta and Google are in there. There's the Chinese that we'll talk about in a second, but we're moving very fast. And well, if you've used AI, you'll know that. I've been using it since the beginning, and recently I've been using the advanced AI models from OpenAI, Peak Research, where you're literally getting PhD level output in a handful of minutes. Again, moving very, very fast, and lots of things that we believe will continue that should keep us moving at a very uncomfortable pace. The market opportunity for AI is the biggest market opportunity because in the end, 60% of work in the Western world is knowledge work. And so AI will cut across all knowledge work. I mean, it will cut across all of it in ways that an agricultural revolution would have cut across most of the economy at that time, and the industrial revolution that followed. This is a knowledge economy revolution, of course. Now, I guess you can spin up some very negative things about AI. It's going to cost jobs and all that stuff, but the things that we want, or the things that we do today, mostly didn't exist in 1945 anyway. I'm pretty confident that humans are going to find better things to do with their time. We're going to probably enter a much more productive period for humans and surprise people for a very long time. And there's a few examples here of where we expect AI to be felt. But if you look at the education vertical alone, if AI was to capture just 2% of the money that's spent on education, that's a $6 trillion market that we can capture 120 billion of. That's just one example. A tiny little bit of that market comes to tech, and that's a new market opportunity for our companies. And this is going to happen much faster than people think. OpenAI already has 400 million people using ChatGPT every day. It probably has 700 or 800 million people using it every month. That's faster than any company that we're aware of. It took Uber 70 months to get to 100 million MAU. It took OpenAI 2. This is a history of technology diffusion. And hopefully you can see that each successive generation of groundbreaking technology takes less time to happen. And of course, this is going to happen much faster because ChatGPT, for most people, is going to be accessed by a smartphone. There are 6 billion smartphones, and everyone now is a digital native. So very much sitting on the shoulders of giants, data that's already been digitalized, models that have already been trained, and a very easy conduit in the form of a smartphone. So this is going to happen much faster than people think, much faster than the internet. And if you listen to companies, this is not, at the end of last year, people said that it's probably past the peak. People are stopping talking about AI. It's becoming old hat. And yet in the last quarterly earnings, we saw more companies than ever talking about their AI efforts. Had some phenomenal data points from companies like Walmart that talked about how it would take 100 times longer to do what they're using AI for if they had to rely on humans, or 100 times more humans if they didn't have AI. And lots of quotes here that you can talk to, or we can are supportive to this idea that this AI story is a very unusual moment for civilization. This is a really interesting use case. We're an investor in a company called Axon. That's the company that makes tasers, but it also makes the cameras that you see everywhere now, tube workers and policemen and what have you. This is a thing that's designed to really change the behavior of people. If you know someone's recording your exchange, people tend to behave differently. But these devices also capture audio and video. And the number one reason that police officers retire in America is said to be that they don't like writing police reports. They take up a lot of their time. They didn't join the police to write reports. And frankly, based on how good their reports are, we can see that. And it's why they retire. Now you can take the audio content from a camera and in 6 minutes generate 80% of the police report required. That is one of the templates, one of the ways that AI is going to change the way we work and enable us to do higher value work, which is in the case of police, is to go catch the bad guys. The timeline, what this really means, of course, isn't about capturing police reports. It's about an ability or a capability of AI to increasingly tend towards human level capability. And we don't know exactly when that's going to happen. People talk about something called artificial general intelligence. So we already have AI that's more capable than humans. We already have AI in certain categories that really are at the bleeding edge. But we don't have AI today that's better than all humans, and we certainly don't have AI that's better than all the things that humans can do. But we're making progress. And if you listen to people like Elon Musk, which with features all probably, 2030 seems like a reasonable time frame for that kind of capability. A year ago, people thought it was 2030. While the year before that, it was 2033. The timeline for AI to reach human capability is shortening. Again, that's a very good news, I think, from an investment perspective. In the portfolios, I wanted to just quickly touch on this. PCT was, I've been running this since 2006, as I say, and we've obviously hugely excited about the technology opportunity, have been really for many cycles. And we've been proud of the fact that we've been able to build portfolios that are diversified, such that you've had exposure to the most important companies at any time, but also built in a way that is designed at least to withstand the buffeting that you get in stock markets. And you tend to get bigger buffeting in places where you're concentrated. So we are obviously one industry, it's the tech industry. And so there will be periods where we get more buffeting like we're in right now. We still try to build portfolios despite being hugely excited about AI. We're still trying to build them in diversified ways. So here we're trying to lay that out. You can see 30% of the portfolio are in semiconductor enabling companies. So companies like NVIDIA, which is our biggest position in the portfolio today. We've owned it for, 15 years probably. But also companies in the cloud area, companies like Amazon, like Google, that for most people at least, you're going to access AI through the cloud. It's unlikely, unless you're JP Morgan or maybe OJ Bell, but you're unlikely if you're building your own AI clusters anytime soon. You're going to be accessing AI, these AI factories. You're going to be accessing that likely through the cloud. So we can capture it there. We can capture it also in beneficiaries. Companies in, say, I don't know, the cyber security space. We know that the earliest adopters of AI are the bad guys. Bad guys aren't encumbered by compliance departments. That's a joke for the people at the front. It's hard for us to change business practices, but this is like a golden age for the bad guys. The ability to be able to take your voice and be able to fake it. The ability to create email that looks real but isn't. Phishing attacks, ransomware. These things are, be careful. Do what you do in the investment market, but be super careful because the bad guys are AI enabled. So we can play that theme via cybersecurity. And then we've got some other stories in the portfolio that aren't AI related, but we hope are on the right side of history. Perhaps they're the Shopify's or the Netflix or Spotify's that will use AI to make their products or to enrich their products. And hopefully that makes a better user experience. And for us as investors, results in higher prices. I think that's all I had for a full presentation. I'm hoping that we have some AI questions, or even technology questions even.
Yeah, so I did have a question before I came here, and it was in relation to the characteristics that you look for in a technology company before you invest in it, and that was the second slide.
Right, let's do that.
I did want to ask, is it okay for me to take a picture of that?
Ask the AJ Bell folks, but I mean, I'm comfortable with that. And this is all on the internet. You can go to our website. There's risk warnings, of course, there, but you should absolutely, you can take a picture from my perspective. This one.
Yeah.
Yes, this is the life cycle of not just the sector, but also a theme. The characteristics of what we're looking for. But in the end, we're growth investors. So the technology sector, I think, and again, I've done this for more than 2 decades and had good periods and bad periods, of course, but I think there's tended to require a different investment toolkit to other industries. There's very little mean reversion, by which I mean, I guess if you're a steel maker, there will be periods in an economic cycle where you're doing well, and there'll be less good periods and so on. Perhaps steel's a bad example because that's not been a great industry, but there are cycles and what have you. But in tech, when you tend to be doing well, you do well and you attract more talent and you can invest in the right areas, and then success tends to forget success. When you're doing poorly, value investors all over you, and you have to cut your R&D and people that don't really want to work there anymore, and the business starts to go into reverse. And this is what I mean by not me reverting. So, for example, my wife's email address is a Yahoo email address. Some people in the room may still use Yahoo, but most people don't. Google won the search war, but Yahoo would have looked like a very interesting value investment for some people, but it wasn't. We're growth investors. We look for where the largest market opportunity exists. We look to find the best ways to harness that opportunity. So where we can, invest in companies that may look optically expensive, but have the highest growth rates, but also have the most exposure thematically to what you're excited about. Don't sing in the shower. Buy the investments that are the best ways to access that investment theme. And in terms of overall profile, we don't do early stage. We only invest in companies really where we can see break even, but within 2 years, and that's rare. This is a very, very cash-rich sector, high margins. So typically, we focus on those companies. And again, seems very obvious to say these things. Focusing on the best companies is sort of a truism, right? But that's what we do try to do. We're not trying to be smart. This isn't a business that we don't care about going to the pub and boasting about the outsider that we won. We're looking to find the very best names in the very best areas to make sure we capture more than our fair share of the returns to the sector. Cool, that was okay.
Good answer. There's a question here. Thanks, Dave.
One of the problems I see about AI is that people will start to assume that the answers are right because it's been done by AI. And the fact that it's done 10 very difficult analyses doesn't mean the 11th one is equally right.
Correct. And I mean, you can argue the same applies to humans. We default to truth, don't we? Otherwise, we'd all go mad. And I think there is a chance that we'll do the same thing with AI. I think it's becoming increasingly difficult to be able to judge the output. So this is true in lots of benchmarks now, where there's really only a handful of people that can actually tell you if what the machine is saying is correct, which is a problem. I mean, it's a high quality problem, just so we're all clear. Machines that are capable of outsmarting most people in many things are interesting. Are they faultless? No. The stuff that we are going to see, the investment that companies are making in their AI capabilities are in part designed to improve the output. And what that means in the end is more compute, more data, more ways to think about the data and to be able to understand the relationships between data. But to your point, in the end, OpenAI and all of the transformer-based models are probabilistic. So they're probabilistic in that they really are guessing the next word if it's a word thing we're asking. But in a sense, that's what human expertise is, right? That you go to a doctor in Harley Street or wherever the street is in Manchester. That doctor may have seen the most patients that are similar to you. But the expertise in human form is really pattern recognition. Our industry is pattern recognition. I know what a good company looks like. I certainly know what a bad company looks like. I've met thousands. And the same will be true for a doctor or a lawyer or whatever it might be. That's pattern recognition. And that's what we call expertise. And I think that's not dissimilar to what AI is generating. So yes, there are going to be drawbacks. Doctors get it wrong. Lawyers lose all the time. Active fund managers haven't had a great one of it over the last few years. So we can be experts and we can still be wrong. And I think that also applies to AI. But the AI opportunity is that the unlock is that there are so many things that are locked to humans that maybe can't afford to have a lawyer or can't afford a private doctor or can't afford a private tutor for their children. But all of a sudden I have ChatGPT. And I have 2 children doing GCSEs and A-levels this year, and both of them are using ChatGPT to pose little questions and then to assess their answers. And with the best will in the world, I'm reasonably good at maths, but I can't do further maths anymore. But ChatGPT can. So I think there are going to always be flaws and negatives associated with new technologies. Payne's talked about this. Nobody ever looks to the future with optimism. We're all pessimistic about what change brings. But if you asked a gas lamplighter to have a look at the world that we live in, they would think we were surrounded by abundance. I'm paraphrasing Sam Altman, CEO of AI. I don't believe that.
The thing is, what I see is that with the acceptance of AI and the success of AI, we will eventually get to an enormous problem, and it could be an absolute disaster.
Sure.
And if it happens early, your AI is going to take a bit of a patchy.
I should have probably stepped back and said, in the end, I'm an investment manager, and you're right. I mean, but you could have made the same argument about nuclear weapons. I'm pretty sure. Like, if you go back to my point about discontinuous technology change, one of the other examples, there really are already maybe 10 or 15 in the whole of human history that have made these type of changes over this space of time. One of them is actually weaponry. The payload that atomic weapons delivered relative to anything that came before. And you would have had conversations around atomic weaponry. I remember it from the 80s because it was quite formative in my youth. And we went to bed scared that we would have a nuclear war that would wipe out humankind. And actually, in the main, we haven't had a major conflict because of, arguably, those weapons. So there will always be catastrophic outcomes for sure. And the very smartest people, just for the record, agree with you. They size the AI risk, the catastrophic risk. Their machines work out that the way to solve the climate problem, the way to solve all of these other problems is probably to eradicate humans. Some very smart people put that down at somewhere between 2 and 5%. So again, if I sound flippant about that, my apologies. I'm focused on the other 95 to 98% of outcomes, where I see this as an incredible moment for humans, where we will be able to offset some of the work we don't need to do in the same way we don't take water out of clothing in the garden with a mangle. We can do other things, better things, and live longer and better lives, more full lives, and more, maybe more equal lives. Sorry, that was a soapbox moment. Anybody else with a question that doesn't require me to go back to philosophical?
Thank you.
Thanks, Ben. And Ben, I'm just interested, I mean, for a large part of maybe the last 1 or 2 decades, you could have run a technology trust investing in 6 or 7 or 8 US technology stocks. And that's not to disparage your role, it's just that's the nature of the momentum in the stock market and what's being termed US exceptionalism at the moment, which seems to be turning. And I'd like to get your view on that. And also, as a sort of running in parallel to that, there are people like Louis Vincent Gave, for example, who are talking about momentum in China, momentum in Chinese technology, and whether that is a theme that is of interest to PCT.
Sure. Okay, lovely. So a few things there. So Mag 7, which encapsulates this narrowness, this market that's been driven by a handful, 7 stocks, or 8 if you include someone like Broadcom, certainly has become a very meaningful market feature over the last few years. I would step back first and say, and this is not in a defensive sense, although it will sound it, I'm sure, it wasn't easy buying Google or the IPO. Yeah. It was super hard. It traded at 35 times forward earnings. Yahoo was trading on 15 times. My boss put a proverbial or metaphorical gun to my head and told me to stop talking about it and make a decision, and we bought some. We bought Facebook at IPO. Facebook had a terrible IPO deadbeat. If you recall, people were worried about the banner ads to the right-hand side of the page. No one knew about mobile data, mobile monetization. No one knew about Instagram, WhatsApp. So I'm not. It looks like it's been easy. Honestly, those battles that we fought over Google and Facebook weren't easy. We've owned them all since IPO. So yes, what you'll also highlight it, however. So the last few years have been about Mag 7. The reason that Mag 7 has worked so well is, like you say, there's slightly encapsulated US exceptionalism. All of those companies have been perceived to be on the right side of the AI story. Many of them are the biggest investors in AI capex. So companies like Google and Meta, Microsoft. But if you step back, the reason that those companies have come to dominate a market is because in the end, they've dominated the profit pools of the industries that they serve. And the reason that they've dominated them is because they have natural monopoly-like status. The reason that we go to Google is because why wouldn't you? Where else is there to go that would give you a better result than the site that has the most traffic? Why would you go to something that wasn't Netflix? Netflix has the most content, outspends everybody else, and of course is now beginning to be able to reflect that in its financials. Why would you shop anywhere but Amazon? Amazon has fulfillment that no one else has. It has a blah, blah, blah. Zero game with this, which is that in the end, I think market narratives wax and wane. And right now, the market narrative is around the unwind, something that was super unhealthy and is a bit .com-y. I couldn't disagree more. These companies are where they are because they've become natural monopolies. They enjoy scale and profitability that really none of their peers can get anywhere near. Could that change? It could. Regulators could change that, for example. Could AI cut across some of those businesses? Potentially. That would be bad. So I'm sure we have others today that will talk about a broader market or smaller companies, and I don't have a problem with any of those businesses. Again, when I started Apollo, we were literally investing across the piece. We were in small, mid, and large. And at some point, we made a decision that actually the advantages the internet was creating these natural monopolies, and we needed to be in them. And the market didn't understand that the winner takes most concept, and now I think everybody does understand. So could we be as anything of that? We could. Will we make changes if we think that that's what we need to do? We will. We've done it before. As to China, we had almost nothing coming into the year. The DeepSeek moment, which we haven't really talked about, but the arrival, if you like, or the narrowing of the gap between the US AI labs and the Chinese was an interesting moment. on top of that, you've had really the President Xi embracing technology leaders for the first time in a long time. And what started off as a very cheap bunch of companies now looks like a pretty cheap bunch of companies. So we bought Alibaba, we bought some Meituan. These are not investment suggestions to you, but just to make a point that we're amenable to, we don't have to be in the US if we don't think that's where the best opportunity set is. So we bought Alibaba, we bought Meituan, we've been looking at some of the other auto. There's been some really interesting progress made by the AV companies too, BYD and Xiaomi. And so, yeah, I think the beauty of being a tech investor in a very liquid part of the portfolio is that we can make changes, and we make them all the time.
That's great. Thank you very much.